If I could wave a magic wand and change one vocabulary word that our industry uses, I would change the phrase risk tolerance to loss tolerance. I think risk tolerance is a silly term because not because it doesn't mean something valuable, but because of the way that it's used. So if the markets are all going up, taking more risk just means you make more money. So why wouldn't you want a high risk tolerance when markets are going up? Would make sense, right? You don't want to lose out, you don't want to miss the upside. But then when markets are going down, taking more risk means that you lose more money.
Welcome to Sterling Insights, Stand Out and Supercharge Your Assets, the go-to podcast for financial advisors aiming to grow their assets under management, stand out in a crowded market, and retain assets nearly forever. Are you advising high net worth clients who own appreciated capital assets? Do you want to help them sell without losing a quarter, a third, or even more of their hard-earned profits to capital gains taxes? Then this podcast is tailored for you. Each episode brings you the latest strategies and expert advice from leading financial advisors, seasoned attorneys, and experienced CPAs. Learn how to maximize your clients' wealth, minimize their taxes, and supercharge your advisory practice with actionable insights. Join us on Sterling Insights, Stand Out and Supercharge Your Assets, where you'll gain the knowledge and tools to set yourself apart and achieve unparalleled success in wealth management. Subscribe now and empower your practice for a brighter, more prosperous future. Welcome to another edition of Sterling Insights. I'm your host, Roger Silk. Our guest today is Austin Collins. Austin is the founder of Integrated Wealth Advisors, a boutique decentralized family office practice that delivers highly personalized financial strategies to selected clients. Austin's advisory career began with early successes, but after he recognized the unsustainability of trying to serve everyone, he restructured his business around a high-value referral-only model, which is what he's doing now, and we'll talk about that. Today, he has a 98% or higher client retention rate, which is very impressive and speaks to the quality of service that they provide. And he works exclusively with clients where he feels that he can make a difference. His practice is built on thoughtful selectivity, coordinated planning, and long-term relationships. And we're going to talk about that. Austin, thank you so much for joining us.
Thanks very much for having me.
Maybe start a little bit by just giving a very high-level overview of Integrated Wealth Advisors for people who don't already know you and don't already know what you do.
Yeah, definitely. So Integrated was started, we were with a larger firm for about 15 years. Great firm, had a great experience there. We left and started Integrated because we believe that our industry as advisors still operates as if asset management is the core value proposition. And then these other things like planning and referrals to other professionals, those things are quote unquote value add. And we believe that the industry has it backwards. We believe that planning and coordinated professional teams are actually the main value that we deliver and the main opportunity to create value for clients, and that pie charts and investment allocations are value add. So that was the reason that we decided to launch Integrated, was because we wanted to build something that was in alignment with those beliefs. We saw the power that model has. And we had been seeing that as we designed and built that with some great support from our coaching group over the few years prior to leaving our firm, our previous firm. And so Integrated now today has three pieces. We do asset management, which is, you can think about that as aligning your resources with your ideal outcomes. We do planning work, which is aligning your decisions with your ideal outcomes. And then we do family office work and our kind of decentralized family office practice that aligns your all of your professionals and your professional team with your ideal outcomes. So those are the three kind of pieces to integrated, and we, as our name implies, we integrate those together in a very cohesive way to deliver that customized support to clients.
Now, I think most people are probably most familiar with the first part, with the asset management. Can you say just a few words about your approach and philosophy on investment management?
Absolutely. So, from an investment management perspective, we think about investments from a little bit of a different angle. So, most advisors work with what is at their firm, first of all. So, when we say asset management, we're talking about all of the client's assets, businesses, properties, illiquid, their traditional investment portfolio, all of it. And so we help clients understand and frame the contributions, both in terms of returns over time as well as how much risk each of those pieces are adding, and help them to develop a strategy that leverages their unique composition of assets to get what they're after. So that's at a high level. We think about asset management a little bit differently than most advisors. The other thing is, if I could wave a magic wand and change one vocabulary word that our industry uses, I would change the phrase risk tolerance to loss tolerance. I think risk tolerance is a silly term, because not because it doesn't mean something valuable, but because of the way that it's used. So if the markets are all going up, taking more risk just means you make more money. So why wouldn't you want a high risk tolerance when markets are going up? Would make sense, right? You don't want to lose out, you don't want to miss the upside. But then when markets are going down, taking more risk means that you lose more money. So risk tolerance typically tends to have a relativistic application. People think they're aggressive when the market's going up. They think they're conservative when the market's going down, right? But in reality, the thing that remains constant, that's a much more helpful frame for that concept, is loss tolerance.
When you talk
Markets,
to,
when the market's going up and I ask somebody, what's your loss tolerance? They give me the same answer as when the market's going down, I ask somebody what their loss tolerance is. So what we do is we talk about what your loss tolerance is with clients. And we understand how much downside they're comfortable with when markets go down. And then our goal is to build them a portfolio that will give them the greatest amount of upside for that level of loss tolerance. So we do investments in a way where we think about loss tolerance first, and then we optimize everything else based on that.
and so well, obviously without any talking about any specific individuals, can you give an example of how that might work in a client context?
A great recent example was 2022. So that was the last, prior to just a couple months ago, that was the last large drop in the market that we then bounced back from in a sustainable way. So what we had done in the lead up to 2022 is we had gone back and we'd come through 2020 and all of COVID. And so loss tolerance is a conversation we have with our clients all the time. That's one of our standing agenda items when we meet with clients is, are there any changes to how you feel about the downside when the market falls? And 2020 was a great stress test for how people were really feeling about their loss tolerance. So we had made some adjustments based on how people felt and if people wanted to take more risk or less, and if they wanted to adjust things. And when 2022 hit, what we found was that people knew what to expect. They saw what their portfolios were doing. It was a conversation that we were still having ever since 2020, and even obviously before that, but just in recent memory. And our clients who were retired found that their sources of income that were creating their paycheck were actually not impacted by the market volatility that they saw. So we were able to create a consistent experience and a stable experience for our clients that were actually needing the money and needing a paycheck. And the amount of volatility that they experienced in their holdings that were in their accounts was in line with what we had laid out in their expectations. So what we found was that we lost no clients at all. In fact, we actually were very highly referred during that time because the experience people had with my income is stable and consistent, and the expectations that we've set and the way that things that we've been able to navigate as a firm, those things resonated really well with clients during that time.
Mhm. So that's, you mentioned three pillars. The second pillar, you got the investment management. What was the second one?
Planning.
Planning. Talk a little bit about how so presumably when a client comes in at the beginning, that's the main focus first.
That's right.
But then you revisit that annually, semi-annually. How often do you revisit that?
So again, most of the industry feels like planning is one of these quote unquote value add things. And so
Mhm.
typically what people mean when they say planning as advisors, what we mean is we do a static projection on some sort of fixed interval, right? So we'll do a snapshot of where you stand toward retirement every year, and we'll do that and we'll track that over time. And that's good. There's nothing wrong with that, but it's not necessarily useful in making decisions and navigating life on a day-to-day basis. It's a static deliverable. It's not a process for making better decisions. We do with planning, what planning means to us at Integrated is it's a process for making better decisions. So what we do, how we structure that, is something that we call constant planning readiness. And what that means is that any one of our clients, any day, could send us an email and say, hey, I know I told you I was going to sell the company. We were planning to sell it in 2028, thinking maybe we might sell it next year instead. What does that mean for us? Could we do it? Does it create any issues we should be aware of? What are the trade-offs? What should we be thinking about? And 20 minutes from getting that email, we can be on a Zoom and I can do a screen share with them. And because I have all of their data and all of their goals and all of their financial situation ready, we have constant planning readiness. On demand, I can do a screen share with them and we can actually model that out together. So we can model out what happens 20 years from now to your asset level if you retire earlier and start drawing money down sooner and sell the company. And what happens if, because you sell the company early, there's 2 years of growth in the business that you don't have. And so you might get less of a sale price. And
Mhm.
what happens if you did this with the real estate versus that with the real estate and sold it versus leased it to the new buyer? Or what happens if you use this tax strategy instead of that tax strategy? So we actually have the ability to visually model all that out for clients in real time. And it gives them a very clear picture of if I do this, if I make this decision, here are the issues that creates. Does that derail anything? Am I comfortable with those outcomes? Are the trade-offs okay? Because planning is all about trade-offs, right? People can do most of the things that they want to do most of the time, but they can't do everything they want to do all the time, right? So
Right. Yeah.
there are these trade-offs. So we help them understand what the trade-offs are and have that on demand. So it's a process that we create for the client so that they can consistently make better decisions from a more informed place.
And does that require you to have relatively regular contact with a client so that if you haven't heard from somebody for 18 months and they call you up and they want to ask you a question, you'd probably have to do a lot of backfilling because you wouldn't know everything that you needed to know.
That's exactly right. We meet with our baseline, just standard. least, like the amount of client contact we have that just is our baseline is that we do one meeting with clients every 4 months. So that's basic. And then for the majority of our clients, we're also going back and forth on email and phone calls and or additional Zooms or in-person meetings with them and with their professional team in between those meetings. So those 3 meetings that we have with them throughout the course of the year, we use those meetings to maintain constant planning readiness. We update information every time we meet with them. So at a minimum, we're updating things 3 times a year and keeping everything current. And then on top of that, we're most of the time we're meeting a lot more often than that with people because clients have a lot going on.
Uh-huh.
Yeah,
And then the third pillar, and that's my word, not yours, but the aspect of your approach that you mentioned is virtual family office.
that's right.
And I think I know something about that because we worked with you on some cases. But can you give an example or talk about how that works and how that is a value add for clients?
For sure. So virtual family office the term comes from or originated with single family offices. So single family office is obviously, as you know very well, is an entity that's not a business. It's a fully staffed, multidisciplinary entity that serves the needs of a single family. So they've got tax, they've got real estate, they've got legal, they've got financial advisory, they've got all these other different concierge services and probably medical people, and they've got all these different professionals in one under one roof, and they're all serving the needs of one ultra high net worth, typically billionaire or kind of in that ballpark kind of family.
Oh, how the world changes, Austin. When way back when I was young, in the late 80s, early 90s, I set up and ran a family office. And ultra high net worth in those days was like 50 to 100. And that was a single family office. But you're right, that you probably add a zero onto those numbers today to have to where it's somebody that has his or her own family office.
That's right. The goalpost has moved a little bit,
Yeah.
just a touch. So we could all just add a zero or two. I think we'd be doing well, right?
Oh, yeah.
I like that strategy. We should all just start adding zeros.
Yeah. That's what the Fed did a few years ago. It didn't work out so well, did it?
That's right. Yeah, that's it. I suppose it depends on where you sit.
Or how those zeros get added.
That's exactly right. And which side of the decimal point they fall on. I think the other piece, so from a family office perspective, one of the principles, the founding principles of the coaching group that I work with, CEG Worldwide, was a guy who was one of the foremost kind of experts and consultants serving single family offices. And CG was basically their client model was their virtual family office model was basically an overlay between one of the founders was a wealth management came out of the wealth management business, built multiple very large wealth management companies, and sold them, was very successful. And then the other guy who collaborated with him to develop the model was from the single family office world. And so what they developed was a practice structure for wealth managers where if you wanted to really invest the time and the resources and install these systems and capabilities in your business, you could actually use the technology and the processes and the collaboration strategies and a lot of the same operating system that allowed single family offices to collaborate so well and to deliver that kind of value for the family that they serve to your wealth management clients. But it was a virtual family office, or we say decentralized family office sometimes because it illustrates the point better. But that family office, we don't have all those people under our roof. The advantage to that is that we get to pick and choose the best CPAs and the best attorneys and the best medical people and tax people and the best business services people. And we get to go out and actually meet and build relationships with these people and then curate their expertise very precisely for clients by building each client their own fully customized professional team. And our role in that is to understand who are the ideal clients of all of these different professionals. Each professional has, even though there's probably a bunch of things they do, there's something they do uniquely well. And our job is to find out what that is and understand how they deliver their service, what their relationship model looks like, and then curate those professionals and build these teams for clients so that a client of ours works with a CPA for whom they're the perfect client and an estate attorney for whom they're the perfect client. That's our goal, is to build professional teams where the client is the ideal client of every single professional that's on the team.
And as obviously we work together on several cases, including some very interesting cases that are ongoing right now. Without, while respecting all the client confidentiality and all that, is maybe you could put a little bit of meat on that bones for people. And I'm asking you about ones that we've worked on because I know about them, but high complexity and where you truly need this multifaceted team because literally no individual, no matter how accomplished he might be, would be able to provide all the necessary pieces.
That's right. So I think a good one would be a client. So one of our specialties at Integrated is clients that have complex transitions. So when a client has a complex transition, that's a really good indicator that we might be a good fit for them as an advisor. One of the complex transitions cases that we were brought in on in 2024 was a client that had a currently zero liquidity and had due to some life circumstances and but had a very high value piece of international real estate that was unique to the point where it would be very challenging to just walk up the street to the local real estate agent and have them in their country and have them sell it. So it was a very illiquid, very complex, very unique asset type. And the overall situation, the client had no liquidity either. And so I was brought in to try to help this person sort through what directions might be helpful, what things should they keep in mind, and to try to help create some path forward. And so I was referred to this person by another professional who was working with her in a different area. And when I met with them initially, most advisors, because they're focused on the pie chart, right, and the investment management, would have had nothing to do. There was no traditional financial advisor scope in the case at all. And because our firm is centered around planning and professional team, there was a lot of work that we could do to help her. So what we ended up doing was we ended up being able to understand the different timelines and constraints and advantages that were in this situation. And we were able to build a customized professional team for her that involved a hand-picked international real estate agent that specialized in exactly these types of properties and had an existing Rolodex that would be very helpful in facilitating that transaction. This person was also able to coordinate the execution of that sale with local agents who are licensed there, and so was able to make it a private banker for real estate, if you will. And so he was able to make that very easy for her. We were able to also get a combination of international tax, legal, and liquidity issues managed by working with you as somebody who's both US and this other country, helping to balance and navigate the tax and legal maze with the International Tax Council that we've and legal counsel that we've also managed to bring in on the case. And so you're helping threading the needle on order of operations and if this, then that, and managing and understanding how to maneuver through this to minimize the long-term capital gains taxes on the sale of this property have been invaluable and have been incredibly helpful. But that's the kind of thing where international tax, international legal, your bespoke trust work, international real estate transactions, all of those things we've been able to bring together and curate in this team. And 0% of those things are things that traditional wealth managers and really the rest of our industry would even see as relevant scope. So we're able to make the
Not only that,
investment.
they wouldn't be able to do anything about it.
Right. Then there's that.
Because this one is pretty far out there in terms of complexity and constraints.
Yeah,
I don't know what your experience is. In our experience, I would say easily probably top 5% of complexity. I mean, we've done other international stuff, cross-border stuff, but this is up there in terms of complexity.
absolutely. I'm very much on the same page.
And so I'm guessing that for you guys, this is a good example, but it doesn't have to be this complicated. Something
No,
I don't want to make it sound like, in my experience and probably in your experience, just selling a business, the seller needs typically probably at least five professionals from different fields involved. Doesn't always have them. And I've seen some very suboptimal outcomes because of basically failure to have at least one crucial team member, sometimes more than that. But if people are listening, anybody, you chose an example of it has extra complexity, but anybody selling maybe not their own house, but even their own house, if it's above some number, we get involved in those. I'm sure you do as well. But any kind of investment property, real estate, a business, even a big chunk of publicly traded stock, probably should be talking to someone like you.
that's exactly right. And one of the things that is so important about what goes into that process, and when you think about what it takes to successfully sell something like that, is understanding what it is that's important and what the real ideal outcomes look like. And I'm sure you've run into this too, but I'm always very interested and amazed when I speak with somebody and I ask them what's really meaningful here and they don't have a good answer. I was talking with an owner of a company, prospective client, several months ago, and this particular individual had a business that was worth, let's call it 30 million plus or minus five, and was considering selling the company and had personal assets that were enough that there wasn't really a need for the business sale assets to make the lifestyle work. And so there was a lot of other things that this person wanted to do with the proceeds from the sale. There's some other things that were important, but this was a situation where we were speaking with this prospective client, and there was another firm that was also speaking with this prospective client, larger kind of national firm. And I asked him what his conversation had sounded like with this other firm. And it was, we have integrated legal services, we can do the trust work, we can do the tax work, we can do the strategy, and we can do the asset allocation and all that. And I said, okay, so I guess my question is, and then what? He goes, what do you mean? I said, okay, so you get all that stuff done, you sell the company, you get your money lands in your account, you get your allocation, and then he goes, I guess I don't know what you're asking. And I said, so let me ask you the same question a different way. I said, think about it this way. You have created a situation where you can afford to be as inefficient as humanly possible and still accomplish everything you want. You could take a low ball offer for the business, you could pay the maximum amount of tax, you could stuff the money in a savings account, and you could withdraw nothing but principal and live on that, earn zero interest, and just have your principal eroded by inflation and spend principal for the rest of your life, and you still wouldn't run out of money.
Good
So
place to be.
so first of all, congratulations, by the way, because not saying that you would want to do that stuff, but
Right.
the fact that you've built that kind of insulation is fantastic. So that's a great spot to start from. But it also creates a different conversation because at that level, your money becomes an expression of your values. It doesn't become a tool that you have to optimize to get an outcome. So I said, given the fact that whatever the tax strategy is, or however much you pay for the legal stuff, or whether or not you have a great bond fund or whatever it is, right? Regardless of any of that, none of those things are going to make the difference between you getting to where you want to go or not. So I would argue that those can't be the things that matter. So, given that backdrop, what does matter? And there was just crickets in that conversation for a few seconds. And I offered up one possible answer. I said, how about this particular person was older? And so they were in their 70s. And I said, so out of curiosity, how about more high quality years to make an impact with what you've built? How about that? How important would that be? So obviously there's nothing that's higher leverage than that. And so that's one of the reasons that one of our virtual family office network partners is a company called Human Longevity Incorporated, and they're based out of San Diego. And they will, on an annual basis, do a full body MRI and a liquid biopsy and take all the data from your wearables and do full cognitive scans and sequence your entire genome, and they will create a baseline for you so that every year on an annual basis, you can preemptively catch 99 point whatever it is percent of cancers when they're stage zero. And instead of being disruptive and fatal, they're 1 to 2 day downtime outpatient procedures. And they'll catch unruptured aneurysms and they'll catch cognitive decline before you notice it. They'll catch all this stuff. They will create the greatest probability that you have of a greater number of higher quality years. And great news is their service is a rounding error in your portfolio. So I was like, that's the kind of stuff, that's the way we think about things. That's this family office type strategy and these service providers that we have. We're looking for what's going to give you the greatest amount of leverage. And we're thinking about going out and finding these people and vetting these people and curating these types of things because this is the stuff that makes a difference for people. But it's opportunities that people don't know they're missing most of the time.
Right. Austin, we could, and I know because we could keep talking about this for a lot longer than we have, but we have to wrap it up a little bit. Is there anything that we haven't had a chance, one or two things that we haven't had a chance to cover that you want the audience to hear at this point?
I think the number one thing that I think would be helpful for people to walk away with from this is that there are a lot of options out there for ways to improve the outcomes that you're getting. There are a lot of different really high quality providers that are out there. There are a lot of different technologies that are out there. There are a lot of different investment platforms that are out there. There are a lot of different fantastic resources. And because innovation is happening so quickly right now in all sorts of different areas, the number of these high quality tools and resources and providers is growing. And so, what I would suggest investing a little bit of time to do is, and I do this myself, is finding really good curators. Find good curators of different technologies. Find people that are out there who are looking around and vetting these things and then sharing them. So for us, as an example, we have people that I look to curate different AI technologies and different applications for that in financial services. Our coaching group that we use, CG, does a best in the industry, fantastic job of that. Look for people who are innovating in the way that they're using different tools, the way that you're using tools, right? I've yet to see somebody who actually, I've seen innovation on the strategy side as it relates to legal and trust and tax. I haven't seen a lot of innovation on the structure side. So I would put you absolutely on our list of people that from a curating perspective, somebody that's able to really curate not only strategies, not only tools, but actually innovate the tools themselves, right? Having these people that you identify that can go out into the world for you and find things that are high impact and help you connect with them is one of the most valuable things you could do because somebody else is doing it, so it saves you time, and you're going to get
Right.
access to much better tools and resources than you ever would on your own. So I think that's a very worthwhile thing to invest in.
That's a great point. And it's also a great segue to my next question because I know that's what you guys do. And my last question is, where can the audience go to find more about you, learn more about you, contact you?
Yep, great question. Great place just for some background about me as well as our firm is my digital business card, which is just www.austincollins.org. Somebody else had taken austincollins.com. I'm now austincollins.org.
Okay, and just to make sure, in case people aren't looking, if they're just listening, you want to spell both names?
Yeah, so Austin, Austin, like the city in Texas, Collins, Collins.org. So all one word, all lowercase, just www.austincollins.org. So that's a good spot to find some background about me, some background about the practice. It's got links on there to our business website, some personal resources and other things that I've curated and have found interesting. So that's a great place. Integrated Wealth Advisors is the name of our firm. So if anybody out there is open-minded to a second opinion on the wealth management side of things and feels like having a family office practice support what your ideal outcomes are in your family is something that would be interesting to you. We'd certainly love to have a conversation about that. And so you can find us on the web, Integrated Wealth Advisors Seattle. You can search for that and we'll come up. And yeah, and my email is austin@integratedwa.com. So integrated normal spelling, WA like wealthadvisors.com. So you can just email me directly if you want as well.
So it's austin@integratedwa.com.
That's correct.
All right. Thank you so much, Austin.
Absolutely. Thank you.
Great to have you.
Appreciate it.
Thank you for listening to another episode of Sterling Insights. Stand out and supercharge your assets, where we provide the info you need from successful leading financial advisors, lawyers, and CPAs. Your hosts, Roger and Catherine Silk, invite you to learn more about Sterling Foundation Management by visiting sterlingfoundations.com.